Hi, this is Brad Keithley, Managing Director of Alaskans for Sustainable Budgets. Welcome to the weekly top three, the top three things on our mind here at Alaskans for Sustainable Budgets for the week of November 11th, 2024. The weekly top three is a regular segment on The Michael Dukes Show. The show broadcasts on both Facebook Live and YouTube Live, as well as via streaming audio from the show's website weekdays from 6 to 8 a.m. I join Michael weekly in the first hour of Tuesday's show from 6:10 to 7 a.m. for a discussion between the two of us about our three issues. We post the podcast of our discussion following the show on the Alaskans for Sustainable Budgets Facebook, YouTube, SoundCloud, Spotify, and Substack pages, also on the Alaskans for Sustainable Budgets website, as well as the project's page on national blog site, medium.com. You can find past episodes of the weekly top three also at the same locations. Keep in mind that in addition to these podcasts, during the week, you can also follow and participate in the discussion with us of these and other issues affecting Alaska's fiscal and economic condition by following us on the Alaskans for Sustainable Budgets Facebook page and through our posts on Twitter. This week, our top three issues are these. First, we explain why we characterize the new House coalition as a bipartisan plutocracy, government by the wealthy for the wealthy. Second, we explain why we remain extremely skeptical about the Alaska LNG project, even after President Trump's recent video. And third, we discuss the internal inconsistency of the Trump energy policy. By making the oil and gas industry stronger, it may make prices, and with that, Alaska, among others, weaker. And now, let's join Michael.
Let's get started. We got a lot to cover this morning, and we're going to start talking about. We're going to use the big words today: the bipartisan plutocracy. I mean, that just sounds radioactive. What do we got here? Give me your take on the weekly top three, starting with number one.
Well, the election's over, and people are already announcing House and Senate organizations. In the House, Bryce Edgmond and Representative Stutes and Representative Kopp announced an organization for the House, the House majority. And when they announced it, they announced four principles that the majority is formed over, and those were not overspending from the Alaska Permanent Fund, staying within the POMV, what they now call the POMV spending cap. It's interesting how people, go grab titles that they think will that they think are popular. So spending, we now have a spending cap. We have a POMV spending cap, and by that, I assume they mean the POMV draw. Stable public education funding, which means K through 12 increases. Retirement reform, public sector retirement reform, and energy development. Those were the four that they included in the announcement of the majority. Now, here's the interesting thing. When James Brooks wrote his article, James Brooks of the Alaska Beacon wrote his article about the formation of the House majority, he included five. And this is James's sentence. Those principles include, first, not raising oil taxes. Second, not overspending from the Alaska Permanent Fund, stable public education funding, retirement reform, and energy development. He included, this is after talking to Kopp and presumably Bryce, he included not raising oil taxes. So if you're going to limit, as we should, limit the draw from the permanent fund to POMV, and you're not going to raise oil taxes, where's the squeeze going to be to pay for not only all these new programs, but the existing programs? Because we're already in deficit. I mean, we're already about $1.6 billion in deficit looking at FY25, looking at the current oil futures market. We're already about $1.6 billion in deficit. Even on the existing programs, just taking the FY24 budget, escalating it by 2.5%, we're already $1.6 billion in deficit. And if you're going to layer on these additional programs, and you're going to cap the POMV cap spending at traditional revenues plus the POMV draw, and you're not going to raise oil taxes. Where's the squeeze going to come from? It's going to come from PFD cuts.
Wait, you used the word plutocracy. I think you meant kleptocracy, I think is what you meant.
Well, no, it's so this approach is it secures the place of the oil companies. They don't have to face oil taxes. Secures the place of the top 20% because they push the cost down to PFD cuts, and secures the non-resident industries, the industries dependent on non-residents or that utilize non-residents, because there will be no contribution required of the non-resident industries. All of it will be pushed off on middle and lower income Alaska families through PFD cuts. It is, for those here's the thing that I just find the most ironic out of this. For those who ran on, we're concerned about working Alaska families, and we're going to, prioritize working Alaska families and looking out for working Alaska families, like Maxine Dibert up in Fairbanks, Andrew Gray, Donna Mears, Ted Eichshed in East Anchorage. For those who ran on that issue, focusing on working Alaska families, they just sold out. I mean, they just sold out. The irony about this is this article by James Brooks appeared in the same week in which my op-ed that I wrote for the Alaska Beacon and others, talking about oil taxes and the fact there is, $400 to $500 million that Alaska can get without adversely affecting the competitive situation of Alaska's oil industry, that we can go get $400 or $500 million. That this article appeared in the same week with that op-ed. And I just think it's an abandonment by the very people who claim they're looking out for working Alaska families. I think it's an abandonment of those very same working Alaska families by not at least raising the issue of oil taxes. I mean, look, they've taken it off the table before the session even starts. They took it off the table, within a week after the election.
Well, it's called
principles include not raising oil taxes.
And those are called organizing principles, right? I mean, those are, when you form a coalition or a caucus, those are called organizing principles. Those are the ones that you stand behind, that you sign your name to. And if oil taxes are on, Brad, this is a complete refutation of everything the Fiscal Policy Working Group came together with in their bipartisan way. I mean, it's like they're hitting it point by point, but they're hitting it the opposite. No oil taxes, no regular taxes, no this. We've got a spending cap now, but it's a POMV spending cap, so we don't have to worry about that. It's like they're just hitting them one by one and trying to stop any kind of long-term fiscal plan.
This is why I have a problem. This is why I have a problem when some people say bipartisan good. Bipartisan equals good, because people are working across the aisle. They're focused on the good of all Alaskans by working across the aisle. It doesn't. I mean, it greatly depends, just like partisanship. It greatly depends on what your principles are, what your bipartisan principles are. And it greatly depends on what you've joined together to do. If you've joined together to snuff out oil tax reform, and we need it. Look, we are 10 years into SB 21. SB 21 is showing cracks and creaks. It's showing some problems. I mean, the issue on which I wrote the op-ed this last week in the Beacon and other places is production is going up by 30%. The forecast in the spring revenue forecast is production goes up by 30%. Revenue from production taxes is going down by a third. It's going down by 35%. While just wrap your mind around this. Production is increasing by 30%. Revenue from production taxes is going down by 35% over the same period. There's a problem in SB 21. I mean, SB 21 was sold on a lot of things, but one of them was we're going to get production increase, we're going to get investment in, we're going to get production increase, and revenues is going to benefit the state because revenues are going to go up. Well, they're not. Revenue from production taxes, the very thing that SB 21 focuses on, revenue from production taxes is going down by 35% over the next 10 years. If there's not a problem with that, if people don't see a problem with that, with production increasing by 30% and revenue from production taxes going down by 35% over the 10-year period, if people don't see a problem with that, then they're just never going to see a problem with anything. I mean, it's just always going to be whatever the oil companies say is what we ought to do. But there is a problem. SB 21 is not operating in the way I don't think anybody would have said it was intended in 2014. There's a problem with the way some of those provisions work in an environment where you have rapidly increasing production as a result of increasing investment. There's a problem with the way it works in that environment, and it can be fixed, and it can be fixed in a way that doesn't take unduly affect the oil companies, unduly affect the competitive position of the oil companies, and it can be fixed in a way that allows Alaskans to benefit through the production tax system, allows Alaskans to benefit in the same way that the oil companies are benefiting from production increases. It can be fixed, and it should be fixed. I mean, that's the easiest way, frankly, to get additional revenues in that reduces the burden on middle and lower income Alaska families through PFD cuts. It should be fixed. And if you're concerned about working Alaska families, as Maxine Dybert, Andrew Gray, Donna Mears, Ted Eichett all said they were, if you're concerned about working, and others, if you're concerned about working Alaska families, that's the first thing you should focus on, because it's the easiest, it's the quickest, it's the least controversial in the sense that it doesn't start taxing Alaska individuals in a different way than PFD cuts. It's the first thing you should focus on. It's the thing that that your resource committee chairman or your finance committee chairman should be committed to looking at from day one. But it's the first thing that the bipartisan coalition is taking off the table. Those principles include not raising oil taxes. It's a sellout. It's a sellout. It's a sellout of everything Maxine Dybert said. It's a sellout of everything that Andrew Gray said. It's a sellout of everything that Donna Mears said. It's a sellout of everything that Ted Eichett said. And I don't get how they can join a coalition that is going to elevate oil companies, the top 20% non-residents, over the working Alaska families that they claim they were elected to represent. I just don't get it.
Well,
so
and before we wrap up here, I just want to say, I mean, you've made mention of we're already in deficit. The 10-year plan from the governor, the projections already show we're in deficit over $1 billion this next year. That doesn't account for all the spending that they've just outlined that they want to include, right? It doesn't include the new K through 12 spending or the defined benefit spending or anything else. That's just with everything continuing at the status quo. They're basically locking us into where else does this money come from? There is no other place other than the permanent fund. It's going away.
Yeah. Well, I mean, they've said they've got a spending cap now. The spending cap is a permanent fund earnings. Interestingly enough, they said we ought to pay attention to statutes. We ought to honor. I think the word in their press release was honor the permanent fund, the POMB statutory cap. Well, there's two statutory caps in that statute. One is on the overall draw. The second is on how much can be taken for government. And that cap is a function of the overall draw less the explicit statutory amount set aside for permanent fund dividends. So there's a cap in there for how much should go for government. I don't think they meant that they're going to pay attention to that one.
I don't think.
I think it's very selective look. Anyway, the long and the short of it is it's a plutocracy, right? I mean, what this bipartisan group is going to do is they're going to look out for the rich and middle and lower income Alaska families, rich in government programs, and middle and lower income Alaska families. Yeah, who cares?
Yeah,
I mean, they're being sold down the river from the very get-go, from the very start of the session, by saying that we're not going to look at oil tax.
Brad, it is such a turnabout. And the fact that they released this press release the day after the election, they're like, oh yeah, we're so confident it's going to happen. They've obviously been working this hard behind the scenes for quite a while. And but just the fact that they have basically thrown everything out that would have created some form of sustainability for the state in the long run. I mean, this can't last for, I mean, if they take, let's just say, you said next year is what, $1.6 billion deficit?
1.6.
Yeah, is what they're projecting right now. That would essentially consume almost all of the remaining PFD at this point, right? Because that's about what the thousand
The
or
PFD is about 2.2, 2.5, 2.4, somewhere in there. So it takes the major share of it.
yeah,
Certainly,
it
but
takes the lion's share.
doesn't take all of it.
So that means within just 2 years, if it goes up again the following year, because these deficits, these billion-dollar plus deficits are projected out for the next 10 years. And if they add the more, more school funding, defined benefits and all that kind of stuff, there's your 2 billion, right? I mean, a 1416 PF or a 1413 BSA is another 600-700 million dollar increase a year.
That's a calculation I ought to do. I ought to do what the rate of spending growth would need to be to wipe out the PFD entirely. And it's probably not going to be that much. I mean, the issue is oil prices are going down, right? I mean, oil prices are going down from the projected levels, what the budgets have been based on, what the 10-year outlooks look like. 10-year outlook is, and oil prices are going down. So the delta between spending that's going up and oil prices that are going down, the delta is growing, and that delta is what determines the level of the PFD cut. And so it's easy. It's just a calculation. It's just a spreadsheet to figure out what the rate of spending growth would need to be to wipe out the PFD inside that delta. And it's probably not going to be much north of 5%. 5% spending growth, annual spending growth, which is probably about the annual rate of spending growth we've had over the last, I don't know, decade. If average rate of growth over the last decade. So it's you can look at it a lot of different ways, but all of it's bad. If you're not going to do oil tax reform, I mean, I just don't get this. I just don't get this. And if that's the price to get Chuck Kopp in your majority, good Lord, that guy's expensive. I mean, if the price is, I'll come join your majority if you agree not to do oil taxes. If that's the price that Andrew Gray and Maxine Dybert, Donna Mears and Ted Eichett and all the others have paid to get Chuck Kopp to come over. That's a hell of a price that you just put on your constituents.
And then add to that Will Stapp price would be no imports of LNG, that we're going to have to subsidize gas to make Alaska gas work. That's his price. He said it in the article yesterday. As long as no imports. If we're not doing Alaska gas, I'm not on board. So, I mean, just keep adding dollar on top of dollar at that point.
You're paying a huge, I mean, all of this is to get the votes to increase K through 12, increase, do retirement reform, to redo, to go back to defined benefits, and to energy development, a bunch of state spending on energy development. If that's the price you're paying to get these guys over, that's just a huge price, and you're doing it. I mean, I want to make this point over and over and over and over and over again. You're doing it at the expense of the very constituents you said you were going to prioritize during your campaigns, and that's just, if the word sellout, may be overused, but it certainly applies in this situation. You're selling out your constituents.
Well, it feels like it, yeah, because you're not supporting them, you're not protecting them. They're the ones that are going to pay all the costs for your dreams and aspirations and your pie in the sky budgets. I mean, you talked about bipartisanship, and maybe I'll start the next segment with that before we jump into number 2, because I think that's an important point. It's not true bipartisanship where it's the parties, it's the philosophies of bigger government versus smaller government. Brad Keith Lee continues with us, Alaskans for Sustainable Budgets, the weekly top 3, number 2. Before we get into it, you mentioned bipartisanship and how everybody aspires to it, and it's this great thing, but it's kind of a dirty word in some ways, and I don't really think it's about the parties, although it's saying bipartisan. We've got Democrats. What you've got is you've got a unified body of people who are pro-bigger government, and you got all the rest of the people out there that are smaller government, kind of have a fiscal plan, everything else. So it's not a true bipartisan. I mean, it may be two different parties, but their philosophies are all the same. More pro-government spending, right?
That's a hugely important insight, Michael, and it pairs with the insight you've had on previous shows about the real divide in Alaska isn't between Republicans and Democrats. The real divide in Alaska is between the big government, but I don't have to pay for it party, which includes both Democrats and Republicans, and the other side. Let's have smaller government and let's share the burden broadly among them among a broad base. That's the real two parties we have in this state.
Yeah.
I would call it the plutocrats and the rest of us.
Yeah.
But that's the real divide. And this is not a bipartisan setup in that regard. It is the plutocrats winning everything and the plutocrats setting the agenda for themselves. Big government, but we don't have to pay for it, and the oil companies don't have to pay for it. So it means you guys on the other side of the divide in the other economic party, you get wiped out.
Yeah. Yeah, absolutely. All right, let's move on to number two. Number two is, what are we supposed to think about AKLNG? And this should be interesting, to say the least.
Yeah. And so Governor Dunleavy releases this tape. I find it interesting that Dunleavy was the only one who had this tape. But anyway, Dunleavy releases this tape. President Trump talking, post-election, talking about that he's going to fight for Alaska like never before, and we're going to get the Alaska LNG line done, and a lot of other things, a lot of other things. But the one I want to focus right now is the AK LNG project. And people have blown up and said, "Oh, that's it, we're done. We got the AK LNG project now. We got President Trump behind us, and we're going to be able to bring this thing home." Not even close. I mean, remember in 2016, Trump was going to one of Trump's themes, if elected, was he's going to revive the coal industry, and it was going to be a coal industry renaissance. Didn't happen. And the reason that didn't happen, and the reason this is frankly likely not to happen, is economics. You can say you're behind a project. You can say you're behind coal. You can say you're behind, the Alaska LNG project. You can say you're behind a lot of things. But if the economics aren't there, they aren't going to happen. And there's nothing with respect to the AK LNG project. There's nothing about their economics that changed with the election. If the federal government wants to fund all of it, maybe that changed, but I doubt that's in a Congress that says they're going to be concerned about fiscal responsibility. I doubt that's going to happen. There's nothing else that changed about the economics, and let's focus on the economics of Alaska LNG just for a moment. We do a Monday chart. Alaskans for Sustainable Budgets does a Monday chart, and our Monday chart is looking at LNG futures. There's futures, just like there's futures markets for oil. There's futures markets for LNG, and they're focused on three global markets. One is what's called the JKM marker, the Japanese JKM, the Japanese Korea marker. It's essentially the Pacific price. Another is the TTF price, the tidal transfer facility in Denmark, in Europe. It's the European price, and then there's the UK price at the national balancing point in the UK. Those are the three major LNG futures markets. If you look out over time, the JKM marker price is going down. The Japanese Korea marker price, the Pacific marker price is going down. In fact, by 2029, 2030, the futures market is saying that the Japanese Korea marker price is $7.78, $8. Let's just call it $8. The Wood Mackenzie study for Alaska LNG, on its best day, on its really best day, with a lot of great assumptions about it, about how much in-state demand they can develop and about how low they can get the cost, is about $12. So you've got the futures price telling you by the time the AK LNG project can be up and running, is telling you by the time you get the AK LNG project up and running, that the futures price in the Pacific market is going to be about $7.78. You can see it on the screen there, and which is the dark red price that goes down over time, and the AKLNG price, which is the dotted line or dash line that we started including this week, is $12.80. And they, with a little bit more demand, they can get that down nearer to $12. That's a huge gap. That's a $4 gap. That's a 50% gap between the JKM price in 2029 and 2030. And keep in mind that even if AKLNG started today, it wouldn't be up and running until 2031. So we're looking at these prices. When you look at the right side of the chart, you're looking at the prices that are going to be, that the futures market is telling you are going to be around for Pacific LNG and 2030, and the dash line is telling you what the AKLNG price is going to be. That's the economics out there, and it's going to get. We're going to talk about this more in the third segment, but the economics for LNG exports, LNG on the water in the world is going to get better under Trump, because he's going to likely undo the limitations on lower 48 LNG projects that the Biden administration put on. Trump is likely going to essentially deregulate the lower 48 LNG market, which will put more LNG projects out there and more LNG on the water, driving the price down even further. So when you have all this euphoria around AKLNG, you got to temper that with what the market's telling you, and with what the economics are telling you. The response to the Trump video on Twitter, of all places, Twitter that's moving farther and farther right, but the response on Twitter was interesting. I follow a bunch of economists, energy economists on Twitter, and here was the reaction of one that's representative of almost every other reaction out there. Trump vows to build long-delayed LNG export project in Alaska. However, the project has struggled to move forward due to a few reasons. No firm commitments from buyers, an 800-mile pipeline required for the project that hasn't been able to reach final investment decision because of the economics. The economics aren't changing. So yeah, it's great. I mean, it's great to have a video. It's great for Governor Dunleavy to be able to, show some tangible sign that Trump remembers his name and remembers what's important to him. But the economics aren't changing. And as we go into, as Alaska goes into this continuing discussion about what we're going to do about South Central gas supplies, or South Central energy supplies, we need to keep in mind the economics aren't changing around the LNG project. There's a couple of other things about the LNG project that are important to remember. One is the time commitment. In order to get down to $12 or $12 an MCF, MMBTU for LNG prices, the Alaska project has to have firm commitments for 20 to 30 years. We're locking in a supply source, a single supply source for 20 to 30 years when we do LNG. So if the world changes, if energy prices elsewhere go down, if LNG prices plunge in the world because we got a lot more LNG on the water than we had before, if the economics of renewables break through, we've still locked in for 20 to 30 years for the LNG project. Importing LNG keeps a lot of flexibility that we lose if we lock in on the Alaska LNG project. And the other thing is the volume commitment that you got to make to LNG. Not only Alaska LNG, not only do you have to lock in on time, 20 to 30 years to pay out the project, because you're recovering the costs on a volumetric basis, you have to have high volumes to recover those costs as well. And so we're essentially locking in on the next 20 to 30 years. All of our energy supplies are going to come through the LNG. If we do this, are going to come through the LNG line, and are going to come, at high volumes, because we can't do anything else, or else we turn the LNG project into a huge white elephant, an unpaid for white elephant. So there's a lot of fundamental economics out there that haven't changed with the election.
Right.
And the euphoria that people are, going off on now about Alaska LNG because Trump cut this video, Okay, it's nice, but it hasn't changed the fundamental economics.
Well, I mean, there's a positive here in what Trump is doing for energy as a whole, for energy independence and American production and things like that. But what most people don't understand is that as you open the doors wide open to that, it automatically drives the price down on everything, gas and oil. And so you're going to see those prices drop, and that's going to create knock-on effects for Alaska specifically because we depend so much on energy production for the revenue stream for the state. And if they don't get it there, there's only one other place for them to get it.
Yeah. Yeah. That's the third segment. Let's not go too far down that road yet.
Right.
Let's keep focused on LNG right now.
I just call them like I see them, but
yeah. But we've got to keep economics in mind. I mean, I honestly don't mind people, getting excited about the Trump cut a video on LNG. That's great. Yes. He cut a video back in 2016 on coal. Yes, that was great. Everybody was happy about that. But we've got to keep economics in mind, or else, we risk if we run off the deep end and say, oh, it's got to be LNG. It's got to be, it's got to be Alaska. Yeah, Alaska LNG project. It's got to be phase one of the Alaska. We run off the deep end. We're locking ourselves in for the long term. We're locking ourselves in for significant volumes for the long term, and we're locking ourselves in at a time that world LNG prices, the futures market is telling us world LNG prices are going down, and Trump's other hand, unleashing lower 48 energy is going to drive those prices down. We need to keep economics in mind as we go through this, and I don't see anything in Trump's video, and I don't see anything out there in the world right now that tells us the economics have shifted as a result of the election.
yeah, no, and again, that's the whole thing. It has to be economical. And if it doesn't make sense economically, no company is going to invest in it. I mean, Kyle just said nobody in the entire world will sign a 30-year commitment at a price 50% higher than the market and futures market are predicting. Nobody's going to sign a contract like that. And even if the state subsidizes it, who pays for that? Oh, that would be us. And then we'd be left holding the bag on the other end.
And it's not, I mean, Michael, there's a lot of things to keep in mind, but one other thing to keep in mind is the Alaska LNG project is fixed costs. I mean, some people say, well, energy prices are going to go down, so the futures market is showing a decline. Well, there'll be a decline in the Alaska LNG. No, there won't. I mean, it's fixed costs. It's the cost of the pipe. That's 90% of the cost of the project. And those costs, once you build the pipe, it's sunk. Those costs aren't changing. I mean, the only way they're changing is the bondholders take a hit by the LNG project not paying them back, and the equity holders certainly take a hit by not getting a return. That's a fixed cost. So it's not that, oh, world energy prices are going to go down because of Trump, and so we'll benefit from that. No, we won't. I mean, it'll kill us to have economically. It will kill us to be tied into a 20 to 30-year project at high volumes at relatively high prices compared to what the futures market is telling us is going to be out there otherwise.
Brad, I mean, if President Trump really wants to solve, I mean, he's talking about more of a national issue and a global issue with this energy development. But if he really wanted to help out Alaskans, he'd just sign an executive order waiver for the Jones Act and allow us to tank LNG from the North Slope down to Kenai. I mean, that would be it, right? I mean, then it would just be however long it took to reverse engineer the Marathon plant down there to import. And I mean, they could just tank it right up and put it in ships and run it around. And the next thing you know, we got all we need is 2-3 ships a year in gas for consumption and to be able to put it away. That would be a quick fix of using Alaskan LNG.
We've got a depth issue at the North Slope. LNG tankers are a little bit deeper. I know we float barges in, but barges are shallower than
Right.
LNG tankers. We got a depth issue at the North Slope, and we need to figure out what we're going to do about that. One way would be to build a pipe out to where we don't have the depth issue. The other way would be build a huge offshore extension to to hit ships where the depth is good enough. But there's a depth issue up at the North Slope that has to be addressed. If it's not only the Jones Act, it's not only the legal issue involved, it's also a physical and economic.
But that would be a fraction of the cost
issue.
of a pipe, right? I mean, that would be a fraction of a cost of a pencil line, you would think.
Presumably so. I'm not seeing a good. I used to, the oil companies used to spend a lot of time worrying about that. And I used to see fairly good numbers on those, and they were fairly high, but I'm sure you're right that they're not as high as the pencil line or the bullet line or whatever we're calling it at any given point.
The ASAP line or whatever they're calling it now. I mean, I think this would be a one way to examine it, to see what would it take. We need a feasibility issue. Somebody obviously has been keeping these plans in a drawer somewhere. How much would they, update them with today's costs and figure out how much it was going to be, and at least have it on the table? But otherwise, the economics just don't work out. No company is going to invest in that with those kind of futures. I mean, that chart, when you sent me that chart yesterday, about dropped my cup of coffee, because I was like, wow, that pretty much says it all right there.
Yeah, it's amazing how much LNG is coming on. Economics work. I mean, when there's a demand for lower price supplies, people will build new facilities to do that, and economics work. And again, we're going to do a little bit more of this in the next segment. But if Trump undoes the Biden limitations on LNG plants, and if Trump undoes effectively the Biden limitations on natural gas supply, if Trump undoes those, we're going to have more LNG plants, bigger LNG plants, more volume, more production of LNG down in the lower 48, which is going to drop the price even more. So economics work. When you have demand and you have the ability to find ways to increase supply, that drops price. And that's what's going on there. We can't, because so much of the Alaska LNG project is fixed costs, is in the pipeline itself, not in the gas component. The gas component in that estimate, the gas component is only $1. So let's say we gave away gas on the North Slope, just free, free. That drops that price, that 12, whatever that price is, 12.80 something, drops it $1, goes down to 11 something. Still much higher than the global LNG, than what the futures market is telling us the global LNG price is going to be. So it's we don't have the flexibility to drive down the price of the Alaska supply in a way that keeps it competitive with what's going on in the globe.
Yeah, that's it.
I wish it was otherwise. I mean, people, sometimes I've been accused of being anti-Alaska. I'm not. I'm pro-Alaska economy, getting the lowest price goods into the state to support the economy. But some people say, well, you just don't like Alaska.
It's the difference between theory and reality. In theory, that's great, but in reality, is it economic? And what is the actual cost going to be? Oh, you're anti-Alaskan because we know it's going to cost twice what it would cost to buy it somewhere else, but we're all about that. Why are you so anti? I mean, it's nuts. It's like saying we're just going to stop shipping all food from the lower 48, and Fred Meyer will only have Alaskan grown. Well, first of all, they'd have to shrink the footprint down to a quarter of what it is today, and you would pay 2 or 3 times as more. Are you ready for that? I mean, is that why are you so anti-Alaskan that you want to buy food made outside? I mean, this is the global market. This is what happens in those areas.
It is. And it benefits us. It benefits us sometimes, but it hurts us other times. And we just need to recognize that and deal with it, as opposed to, oh no, we're going to have Alaska gas no matter what.
Yeah, it's frustrating. It's frustrating to watch, because I too would love to see Alaskan gas be used in Alaska, but the numbers have got to pencil out. They've got to pencil out. If they don't, then what's happening is we, the citizens, are paying for everything, regardless of what our energy bill looks like. Let's talk a little bit about the internal inconsistencies of the Trump energy policy. And there's pros and cons to the Trump energy policy. We were just talking about that here a minute or two ago. But overall, like I said, there's a knock-on effect anytime you get some of these energy policies with Alaska specifically, because we draw all our revenue from, well, a big chunk of our revenue from the energy sector. And so if it affects that, it's going to affect everybody. But Brad, give us your thoughts on the inconsistencies here.
So I think people would say fairly that the Trump energy policy is more production, is more access to public lands, and then certainly has occurred in the Biden administration, occurred in the Obama administration, more access to public lands, opening up more production areas, reducing limitations on artificial limitations on energy choice by forcing investment in renewables when oil and gas may be cheaper, and reducing those limitations and just opening things up generally. What that's going to do, likely, is it's going to increase supply. It's going to increase U.S. supply. We will increase, access to public lands. We will overcome limitations on gas production and on oil production. We'll build new pipelines. We'll open up the energy market, the oil and gas energy market, in a way that will increase supply. That's great in terms of the amount of supply. It's great in terms of production. It's great in terms of sources. But that will have an effect. Um, no one, I think, no one is looking at increases in demand that are commensurate with the increases in supply. And so if you increase supply without a commensurate increase in demand, what you're going to have is lower price. Uh, Increased supply, relatively the same demand, is going to result, or some slight growth in demand, but not commensurate, is going to lower price. And that's going to be the consequence on both the oil side and the gas side, from the U.S. standpoint. Um, and so what's that going to do? Well, it's going to make Alaska's life a little bit more difficult. Yes, we may get increased volumes, but as we're showing now under SB 21, what that's resulting in is in reductions in production taxes. And it's not being offset by increases in royalty, because a lot of the increased production is coming from federal lands where the royalty goes to the federal government as opposed to going to the state government. So increased production, at least the experience that we're going through in the next 10 years, according to the spring revenue forecast, increased production is leading to lower revenues for the state. Additional increased production, opening up additional lands, going and exploring for and developing additional lands, will drop price and likely also have the effect of dropping revenues to the state, because increased production is not resulting in increased revenues to the state. It's resulting in lower revenues to the state. So we need to be real. We need to understand the trade-offs that are going to go on here. Yes, increased production, opening up additional lands, provides new opportunities that Alaska should take advantage of, additional development that we should take advantage of, additional growth in production volume that we should take advantage of. But we need to look at the revenue side and understand what's going to happen to us on the revenue side, and we need to balance that. The increased growth is going to come as a result of what the federal government's doing. They're going to open up additional federal lands. The revenue side is entirely within the scope of the Alaska state government, and whether we take the actions necessary to get a corresponding increase in revenues as well. We also need to recognize, as we just went through with the LNG, on the LNG side in segment 2, we also need to recognize that increased volumes, increased LNG development, increased exports, increased gas production, increased exports in the lower 48 of LNG is going to have a knock-on effect on the economics of what's going on in Alaska. It's going to reduce the price of LNG globally, and it's going to increase that delta that exists between the Alaska LNG project, phase 1 of the Alaska LNG project, and globally available supplies. So it is good from the standpoint of energy development. It's good from the standpoint of oil and gas development, oil and gas opportunities in the state. The Trump administration will be, but the economics. I mean, we're not. It's unclear what the economic effect's going to be. The economic effect could be bad as a
Right.
result of increased supply, increased development, lower prices, and even lower production tax revenues.
I mean, bad for Alaska, not necessarily for the country, but bad for Alaska overall, especially in where we're sitting now. Have you done any analysis of this phase one, the Wood Mackenzie phase one of the Alaska gas pipe? Have you done any analysis of what that's going to cost Alaskan citizens if we, instead of a private entity, tries to underwrite that? Do you have any idea what the cost of that will be to Alaskans? And what would the ultimate cost then? What would it then cost us at the pipe, right? When we're heating our houses or doing that down, in the South Central or any area where we're generating electricity with the gas. I mean, have we looked at any numbers on that?
Well, what Wood Mackenzie does have those numbers in terms of the per MMBTU price in South Central, and that was the 1288 that we were, or 12 whatever it was that we were looking at on the chart previously. And that's, if I recall correctly, the LNG phase one, the Alaska LNG phase one is now they're saying is 10 billion, 12 billion, somewhere in that range in terms of cost. To give you some perspective, that's about a seventh of the size of the permanent fund right now. About 10 to 12 billion would be about a seventh the size of the permanent fund. Permanent funds plus or minus about $70 billion. So that's the range of cost. If we have to build it ourselves, the price is the 1288 is assuming full volumes, assuming a 30-year commitment, 20 to 30-year commitment, and assuming full volumes over that entire period of time. That's the cost. And compared to the world market, that's that's what the chart was. It was comparing
Right.
that price against the world market, which is showing prices in the sevens. The futures market showing prices in the sevens right now.
I'm just
Out in that
wondering
time
what
frame.
Alaskans would pay directly in that kind of, in the form of PFD taking or government expenditure or
Mm.
what, price at the wellhead or price at the meter, kind of thing. I'm just thinking we're so, people out there are so determined that we have Alaska gas at any cost. And I'm just like, but at what cost? Is it double what it would be for us to import it? I mean, could we have it delivered for that $7 and change from the Asian market? I mean, these are the questions that are running in my mind as I look at this. What what is the actual cost to Alaskans going to be if we demand in this emotional way that we must use Alaskan resources?
Oh, we could well be, by the time you count if we have to pay for the bulk of, if Alaska has to pay for the bulk of the LNG facility out of PFD cuts, and you translate that into, we could well be in the high teens in terms of the cost per MMBTU, um, both the cost of the LNG plus the cost of the foregone PFD, in order to finance the building of the LNG line. We could well be in the high teens compared to a world price of what the futures market is telling us now is going to be sub 10, is going to be single digit. So yeah, we could well be above more than two times. And again, Michael, I want to, because this is important. Again, it's not just a one-off. It is a 20 to 30-year commitment at full volumes that we're talking about, that sort of difference. So significant.
It's a big number. It's a lot of change and it's a lot of pie in the sky. I think people, again, trying to ease the electorate instead of looking at the actual numbers, and that's a real problem. I mean, that's the thing, Brad. We are so hung up on we must have Alaskan gas. We must use, and again, I keep going back to my food argument. I mean, I'm all for food sustainability, food security, building, growing what we can here and doing all that. I buy vegetables from the farmers and I do everything that I can do. But the bottom line is in this global market, the idea that we reinvent the wheel and only make food that, only eat food that's here. I mean, nobody would buy into that. Nobody would. But as soon as it's Alaskan gas, oh, then it's an emotional tie, regardless of the cost. And that's the thing. Nobody's talking about. That's why I was asking those questions. Nobody's talking about the end cost on this for what is it, what does it take? They keep putting the boogeyman of, oh, well, they could control, they could shut us off. They could just not ship gas to us, yada, yada, yada. I mean, there's a lot of fear tactics going on there, but what is the actual cost to Alaskans in the end?
Yeah. Well, I'll try to run those numbers. That's a good question. I'll try to run those numbers. I'm going to wait. Wood Mackenzie is supposed to do a full presentation to some committee of the legislature at the end of this month. And I want to see what that. I mean, there may be surprises in there. They may have found ways to have cost savings, and I want to see that before I do the full analysis. But yeah, I mean that's a good number to run. And the equivalent on the oil side, Michael, the equivalent of this emotionalism on the oil side is SB 21. Oh my God, we've got to stick with SB 21. It's worked. The volumes are increasing. Look at all this production increase. Look at all this new investment. Look at all these people, going back to work. Isn't that all great? Let's look at the revenues. I mean, let's
It's,
let's look at
it's
the economics of what's happening with
yeah.
SB 21, and they're going down,
That's like
folks.
you're
They're
in a
going down.
you're in a company making widgets, and look, the demand for the widget is up. We went from 1 million a day to 2 million a day. But how much money are we making? Well, we're losing money, but that's okay. Look at the volume of that. It'll make it up one day. I mean, that's it's crazy. Oh, it's the
And
production is going up. Okay, great. What's the take? Oh, the take is 30% less. Ooh, somebody, I mean, nobody's talking about that except you.
yeah, it's I mean, it's a little stunning. I mean, seriously, your jaw dropped when you saw the chart about, the futures, LNG future prices. My jaw just completely hit the floor when I saw that the so-called bipartisan House majority, or bipartisan House caucus, the ones that have said, the ones whose members have been out there saying, we're looking out for working class Alaska families. We're looking out for middle and lower. When that's the one that headlined their principles with no change in oil taxes, no change in declining oil tax. I mean, I don't get it, Michael. I don't get it. It is. I mean, the explanation, I think, is your explanation of it's not really Republicans and Democrats. It's the plutocrats against the rest of us.
Yeah.
And I think
Yeah.
that's probably the explanation of what's going on.
Well,
But for Dybert and for Gray and for Mears and for Eichhed and for Cliff Grow and for others to buy into, people who have said they're focused on working Alaska families, for those people to buy into that principle is just, I, I don't know if we ever get out of this. If we've got nobody standing up, really standing up for working Alaska families, I don't know if we ever get out of it.
well, and especially if you hit them with a cold hard truth and you're like, reduction in, increase in production, reduction in royalties, where does the money come from? And what happens when that money source is gone? That's my big thing here, is that you can only draw from the bottomless, quote unquote, permanent fund dividend side until it's gone. And if you're increasing and you're increasing and you're increasing and it's $200 million a year in increase just baked into the formula, I mean, in 5 years, that's $1 billion. Where does that money come from? Oh, well,
Yep.
then it's us, right? Then it's, hey, sweet lips, your free ride's over. And then, as you talked about earlier, that creates the doom loop of, well, these people are like, I'm not paying. It's already hard enough to live here. I'm leaving. And they leave, and those taxes get spread over a smaller area. And then and then somebody else says, no, I can't. And they bail. And this pie just starts shrinking smaller and smaller. There's nothing left.
It's already been us. I mean, I know that the issue out there in the future is it will be us again, but it's already been us. It's already been the working middle and lower income Alaska families that have been paying for it through PFD cuts. They're already bearing the burden, and they're already leaving. If you look at the outmigration
Yep.
is in the middle and lower income Alaska families.
Yep.
They're the ones leaving. Why do you think they're leaving?
Yeah.
Because the economics aren't working for them anymore.
Yeah. No, it's brutal. It's brutal when you look at it all. All right, Brad, final thoughts, elections, anything else? I got about 90 seconds here.
So I'm going to be interested to see what the comments are. Certainly, once the final election results come out, I'm going to be interested in seeing what Wood Mackenzie says about the LNG project. All of this is going to be a continuing conversation. But what I want people to focus on throughout all of it is the economics. Economics matter. Who pays matters. The consequences of who pays, the consequences of economics matter. All of this nationalism about it's got to be Alaska gas and all of this nationalism about SB 21, you've got to look at the economic consequences of that. And if we don't, we're just going to continue to keep going down this death spiral, this doom loop that we're already in.
Yeah. The metrics of the economy. What does it cost? Who pays? Those are all things that we should be asking that none of these people seem to be asking. And unfortunately, the one guy that's really been asking these questions, Ben Carpenter, is not going back to the legislature. And that is, like I said, of the good, the bad, and the ugly, that is the ugly for sure. All right, Brad Keithley, go ahead quickly.
Well, I just hope Ben keeps talking.
I hope he
focused
does.
On the economics.
I hope he does as well. All right, Brad, thank you so much. We'll see you next week, okay?
Michael, as always, thanks for having me. Well, that's a wrap for another week's edition of the weekly top 3 from Alaskans for Sustainable Budgets. Thank you again for joining us. Remember that you can find past episodes on our YouTube, SoundCloud, Spotify, and Substack pages, and keep track of us during the week on Facebook and Twitter. This has been Brad Keithley, Managing Director of Alaskans for Sustainable Budgets. We look forward to you joining us again next week on the weekly top 3.